And in our top business story, the upcoming release of UAE investment law by the end of this year is expected to boost the UAE's gross domestic product between 3 to 4%, according to His Excellency Sultan Al Mansouri, the UAE Minister of Economy. Speaking on the sidelines of the annual investment meeting currently taking place in Dubai, Mansouri was quoted as saying that the new law will enhance the overall investment and business environment across the UAE, helping local markets become more favorable for foreign investments in most non-oil sectors, especially tourism, real estate and financial sectors. To boost the overall business environment, the UAE government intends to upgrade its legal infrastructure by revising tens of laws and regulations, including a company law, an investment law, a bankruptcy law, a competitiveness law, an arbitration law and an intellectual property law, among others. Once implemented, the new laws would strengthen the legal infrastructure and boost the economy. Currently, the accumulated value of UAE foreign direct investment touched $92 billion. The Central Bank of the UAE will introduce a mechanism allowing the country's banks to borrow funds from it overnight in an effort to help their liquidity management. According to local reports, the Interim Marginal Lending Facility, or IMLF, will let lenders use certain assets as collateral to obtain one-day loans, according to a letter to banks which was published on the central bank's website on Tuesday. Such mechanisms, common in developed money markets, are especially useful during times of market stress, when banks are reluctant to lend to each other because of a desire to maintain their cash holdings and out of fears that the borrower might default on the loan. The UAE Central Bank originally announced in September 2012 they would set up the so-called discount window as a way of developing its monetary policy framework. Banks accessing the IMLF must borrow a minimum of 10 million dirhams and will be charged 100 basis points over the official UAE repo rate for doing so, according to a separate document on the central bank's website. Large-scale infrastructure developments across the UAE have increasingly urged air cargo companies to collaborate with other logistics service providers to offer multimodal solutions, which topped the agenda of the opening day of the Middle East Air Cargo and Logistics Exhibition and Conference taking place in the capital. The two-day inaugural conference is being co-held with the 4th Annual Emerging Airports Conference and Exhibition, where senior officials from leading airlines, airports, shipping, freight and logistics service providers have gathered to discuss the future trends of the regional freight industry. According to figures released by IATA earlier in the month, global air freight markets in February 2014 showed a 2.9% increase in demand compared to the same period last year, with the Middle East market leading the way with double-digit growth of almost 12%. Coupled with the increased significance in the region, developments such as the 1,200-kilometre-long Etihad rail connecting Dubai World Central and Khalifa Ports and Industrial Zone, along with other hubs, have urged cargo companies to cooperate and offer services on multimodal logistics platform, connecting air, sea and land and its support industries, including warehousing and distribution.
Those companies that want to stay around have to diversify, so collaboration plays a big part in what we're doing, certainly this year and beyond. You know, the true multimodal concept, where before everyone wanted to fly, it was the only way to move cargo. I think those days are gone for the moment, so we have to look at some flexibility where, you know, with Dubai World Central and Jebel Ali Port, where we're looking at a combination of air, sea, and obviously here today we're talking about Etihad Rail and what that will bring on an intermodal basis. So I think that's quite exciting for the shippers, for the customers, and the logistics future in the Middle East is obviously strategically placed to be part of that. It's a balance between time and cost. So I think the multimodal aspect we're seeing from, for example, at DWC and Jebel Ali Port has been quite successful over the last 3 years, and I think that will grow exponentially in the next 5 to 10 years as DWC attracts more and more infrastructure.
Speaking at the conference, the official from Etihad Rail added that the multi-billion-dollar project, once completed in 2018, will be the logistics model for the future, adding that through its connection to the rest of the GCC, the UAE will be able to build up its position as a regional trade and logistics hub. Aside from cost-effective benefits, it was added that the project should also reduce the carbon footprint by 2.2 million tonnes of greenhouse gases per annum.
Aside from the carbon impact that we will be contributing to the country, there's also, by putting freight on trains instead of having it move on a truck, will reduce over 8,000 trucks off the highway in the future. Now this will reduce congestion, which will improve flows of traffic so that there's less safety issues, less fatalities, less accidents. Railroad will typically be a high velocity product for freight coming in from the ports to get to, let's say, the final destination. Instead of going by truck, you can go by train, and you have dedicated service, dedicated schedules, and nonstop all the way. So it's typically will be a good mover of time-sensitive freight.